This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on August the 11th, 2016. Our time is 8:47 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. We have shows archived. If you ever miss a radio show, they're on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. We are on your portable device anywhere you go. We're also on TuneIn, and we have our very own YouTube page. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. And as we start today's show, congratulations to Team Canada at the Olympics. So far, the Olympics in Rio, Team Canada has been outstanding, and congratulations, Team Canada, representing us very, very well. Our featured diamond of the week, a 0.22 carat, hard-cut, fancy, vivid, purplish pink argyle. This is a beauty. See it online at rarecoloreddiamonds.com. rarecoloreddiamonds.com, a 0.22 carat, hard-cut, fancy, vivid, purplish pink. We'll talk about diamonds in the second half of the show. Interesting to note this week, there was a survey done by WealthX. The richest people in the world are frightened. They are spooked. They're keeping more cash in their pockets, a sign of fearfulness. Billionaires are now holding $1.7 trillion in cash. Liquidity, or the portion of their net worth in cash or cash equivalents, is now 22.2%, according to the research firm WealthX. That means $2.22 out of every $10 in wealth is currently held in cash, the highest level since 2010. The report looked at 2,473 billionaires with a combined wealth of $7.7 trillion, and it's hard not to see why the super rich would want the flexibility that comes with holding large sums of cash. Geopolitical turmoil, terrorism, Brexit, and the U.S. election are adding volatility to global markets amid a grim economic picture around the world. And Harold, it does not surprise us when we hear stories like that. You've recommended keep cash on hand, and a lot of billionaires obviously are listening and taking recommendations to hold cash. The smart money is in cash, looking at hard assets. Last week, we had Bill Gross come out and say that you should buy hard assets. We also had Jeff Gundlach come out and say that sell everything. We'll talk about Mark Faber a little later in the show, what his recommendation is. He's calling for a huge pullback in the stock market. So cash at this point in time, Harold, is not necessarily a bad thing.
No, it isn't. The fact is that you're not making any money in the market, and you're not making money keeping your money in the bank type of thing. So it's interesting to see where the billionaires would be keeping their money on a day-to-day basis. My guess is that they just put them into T-bills, because having that much cash on hand, we know what the situations are at the bank, that you're only insured up to $250,000. So the fact is that they've got to do some juggling. It's the craziest time. The elections in the United States are a major concern. Everybody's talking about it. The fact is Donald Trump is really putting his foot in his mouth, and he's blowing this election. He basically was winning it until the last couple weeks, and he can't keep his mouth shut, and all he keeps on doing is hurting himself even more. The consensus is that Hillary, most people look at her as untrustworthy and a thief type of thing, but then you have Donald Trump, who flies off the handle, and it's going to be a very interesting situation, but a true embarrassment for the United States to have two candidates that are so pathetic that this is what it's really boiling down to. So, again, my gut feeling is that if Hillary does get in, she is the safe one for the market. Basically, we saw the last 8 years of the Obama government, and nobody feels that Hillary would change anything that dramatically. So the stock market would be pretty comfortable with Hillary getting into the presidency. But again, a lot can happen in the next 2 months. There's a rumor out that there's going to be a WikiLeaks leak about Hillary Clinton's emails, and supposedly the news is strong enough that it's going to hurt her. But again, with Donald Trump doing what he's doing, it's almost a laughingstock type of thing. So the markets are trading in a range at this particular point and will continue to do so. Right now, gold is trading at $1,350. The major resistance for the market is at $1,380. We haven't been able to break that. So we're trading in a range at this particular point, and at the higher end of the range. On top of that, the volume in gold and silver has picked up tremendously, which tells me that the general public is getting involved in the market at this point. Generally, on a short-term basis, that's not a good sign. The fact is that when the volume goes up in trading, it means that the speculators are heavily trading the market. And we also know that the commercials, which are the banks, are taking the opposite side to the market. They've got the largest short position in history. So who do we believe? Do we believe the speculators, the general public, that are reading the hype in the market and saying that gold's going to explode at this time and are buying gold and silver? Or do we believe the commercials, who are the banks like JP Morgan, that are accumulating all of the gold and silver as the prices fall? Our feeling is that the commercials are going to win out again, as they have done on almost every single occasion. So over the short term, we do believe that we're going to see a pullback in the price of gold. I've been saying that for quite a while. We started the year at $1,050. We said that gold could get to $1,000. We're in $50 within the low of the market, and I think that's pretty outstanding. However, the fact is that I'm looking at the open volume in the market. That tells me that, again, the trading is getting heavier and heavier, and that normally precedes a drop in the market. So it's not like we're looking for anything ridiculous. We're not looking for gold to fall apart or silver to fall apart. It's just not going to happen, not with all the current events that are going in the world. You've got, as Randy mentioned at the beginning of the show, you've got Brexit, you've got ISIS, you've got the elections, you've got all these problems in Europe and all over the world. So the fact is that gold's not going to drop substantially. But does it have a chance to drop back down to 1,050? I believe it does. I think it could happen before the end of the year, and then I think that the next rally in gold is going to be substantial. I think the next rally in gold after that is going to take it to levels beyond the $1,900 level that we saw back in 2011. So the fact is that right now we're just trading in a range. It's been extremely boring so far this summer. Nothing spectacular has happened. So you've got gold trading in a range between really 1325 and 1350, 1360, so it's a fairly short range. Silver's trading right at around 20, trading between $18 and $20. So again, the market's in a range, waiting for some news to come out, but the thing that really has caught my attention is that massive short position that the commercial banks are holding, and almost every single time that this scenario has taken place, the market has fallen back. So again, don't be concerned, because we're not day trading the gold and silver market. We don't go in and out of the futures market. Those are the riskiest things you can do. You buy and hold gold and silver, and over the medium to longer term, with everything that we just mentioned happening in the world, it's very, very possible that we could end up seeing gold well over $2,000 an ounce. And again, we'd have to reanalyze after that. But again, some of the situations are so severe in the world at this particular point that $4,000 to $5,000 gold would not be out of the question. A lot of people thought that $1,900 to $2,000 gold could never be accomplished, but we saw that in 2011 until they decided to destroy the gold and silver market. So all in all, markets are trading in a range in almost every single commodity at this point. You've got the U.S. dollar trading right now very close to around 96 cents. It was over 97 cents last week, pulled back about a penny and a half on some profit taking. That's why we saw a rally in gold this week. However, again, the U.S. dollar is still the strongest currency, will continue to be that way for a long time now. So again, we do anticipate with a strong U.S. dollar, that is also one of the reasons why gold is going to pull back. The crude oil market got down to $39. Don't forget, it was trading at about 55, went down to 39 and change. It's back up to 42. I still believe that crude oil, that there's a massive oversupply of oil on the market. A lot of the countries are not doing well now, so people are not traveling and spending as much money. So my outlook for crude at this point is for crude to trade about $10 lower than where it is right now. I'm looking for, before the end of the year, that crude oil is going to hit somewhere around $32. Right now, as we're taping the show on a Thursday, the Canadian dollar is trading at the 130, 131 level. Last week it was at 132. If oil does drop another $10, as I'm predicting, that could drop the Canadian dollar, down to about the 140 to 145 level. So again, we're anticipating that the Canadian dollar is going to continue to weaken, and the U.S. dollar will continue to strengthen. Now, for the past several years, I've been saying to my Canadian clients and listeners to our radio show to get out of Canadian dollar-based investments because of what we anticipated to happen in oil and because the Canadian economy is suffering right now. Let's face it, what's happening in Alberta is horrible. I mean, not only has the oil market fallen and taken away a lot of jobs, but the tremendous fires up in Fort McMurray and now the flooding, it's been a horrible year. And the fact is that we anticipate that the Canadian dollar is going to fall further. But just because the Canadian dollar is going to drop and certain things are going to happen in the market, you've got options available to you. There's things that you can do. You can either sit back and watch it happen and say there's nothing I could do about it because I'm just a small guy in a big market, or you can get proactive and you can do things about it. Now, many of my clients have taken my advice and converted Canadian dollars into American dollar-based investments with us. We have, because we're in the alternative asset business, we have investments that are private. We allow our Canadian clients to invest with us. Our Canadian clients have converted Canadian dollars to American, and now they're getting returns of over 25% and getting returns in American dollars. And right now the American dollar is worth 130. That means almost 30% more on the investment on top of how much the investment has gone up. So the fact is, it doesn't matter what size investor you are. Most of my clients are not the Warren Buffetts of the world. Most of my clients are hardworking, everyday Canadians that just want to do better than what's available. And let's face it, keeping your money in the bank at 1% or less is not making money. It's losing money, because between taxes and inflation, if you keep your money in the bank, you're losing money every single month. And then what it does, it forces people, because they're not getting a return in the bank anymore, it forces them back into the stock market. Well, as Randy talked about at the beginning of the show, the smart money is getting out of the stock market right now. And so if the experts are selling, who are they selling to? Again, it's the general public that is buying into a market because they're looking for better than average returns. But 90% of the people that trade stocks lose their money. Everybody who puts their money in the bank is not making any money. So what are we accomplishing? If you go with the old standards, which is keeping your money in the bank for interest, which you're not going to get, soon we'll be getting negative interest, and putting your money in the stock market, you're going to lose because most people are not expert traders. Give me a chance. Give us a call. My clients are making over 25% a year, and they're making it in American dollars, and they've been doing that for the last 3 to 4 years. If you're not on board with us, just give us a call. The phone call is free, so is the information. Give us a call and let us explain to you what we're doing. But again, if you're sitting there worried about how you're going to ever retire, which most people will never get a chance to do now, unless interest rates ever go up again, which is not going to happen. The only country that is raising interest rates possibly is the United States, and that's because the U.S. dollar is going to be the strongest currency. You need to get into the strongest currency, otherwise you're going to suffer with your investments. Give me a call. Let me explain to you what we're doing for our Canadian clients that are making over 25% a year, and they're making it in American dollars.
1-800-432-1022. Call Harold, 1-800-432-1022. The website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. Our featured diamond of the week is a .22 carat hard-cut fancy vivid purplish pink argyle. You can see it at rarecoloreddiamonds.com, featured diamond of the week. Interesting note as we tape today's program, Macy's in the United States is going to close 100 out of 675 department stores nationwide. Most will close in the United States in early 2017. And yet we're being told everything is okay with the U.S. economy. Last week, we had a couple of warnings from some top investors. One was Jeff Gundlach, a bond expert, runs a massive bond fund in the United States. He said, basically sell everything. We also had Bill Gross, he used to be with PIMCO, now with Janus, coming out and saying, have hard assets. He's talking about gold, real estate, other hard assets. Now, another story that came out this week from another expert, it's worth noting, Mark Faber. And he says the big one is coming. Mark Faber is still bearish. In a CNBC interview on Monday, the editor and publisher of the Gloom, Boom, and Doom report spoke on why he sees a 50% drop in the S&P 500 coming and why he likes U.S. Treasuries right now. Faber said, stocks rallied because of the easy monetary policies of central banks around the world that have increased the flow of money. When you print money, something goes up, Faber said about the stock market. The real economy in the real world is not doing well. And with the S&P 500 again hitting new highs 7 years into the bull market, Faber is calling for a 50% crash. I think we can easily get back 5 years of capital gains, which would take the market down to around 1,100. The benchmark index closed on Monday at 2180. Faber says he owns some stocks, which make up about 40% of his portfolio with emerging market bonds. His portfolio is also diversified with precious metals like gold and silver, which have gained about 25 and 41% this year, respectively. Treasuries have also had a big year, and Faber said U.S. bonds are still one of the relatively good buys out there. I can buy a 10-year U.S. Treasury at a yield of about 158 today rather than have a negative yield on the 10-year Swiss franc bond or a Japanese bond, he said. So they're not attractive as an investment. Treasuries at this date, but compared to cash and other sovereign bonds, they are. And interesting to note from Mark Faber, he's calling, Harold, for a 50% pullback in the market. And Bill Gross, who said last week, invest in hard assets, came out this week and said without the U.S. consumer spending in the United States, the U.S. would be in recession. And as we tape today's program, as mentioned, Macy's in the United States closing 100 out of 675 stores. And Harold, obviously, that's a microcosm of what's happening with the U.S. economy. In my opinion, obviously, they're in serious trouble, and a lot of it is smoke and mirrors. And what you find is a situation where when you really look at things deep, the average everyday person has not had a raise in 15 years and is feeling the pinch, and consumers are feeling the pinch. And if they start to pull back, as Bill Gross was saying, you're going to find a recession in the United States very, very quickly. Harold, your thoughts?
Well, again, I don't believe at this point here that the stock market is going to drop 50%. I just don't see it. You know, the fact is that every economy in the world right now is in trouble. So look at the one that has the strongest economy still is the United States. There's so much foreign money coming into the U.S. stock market. I just don't see it. I just don't see it happening. It would take a monumental situation like the mortgage crisis back in, 2008 and 9 in order for the market to do that. So, again, I know that I'm a Canadian living in the United States, and, I analyze the markets and I see what's happening on a day-to-day basis. But no matter how bad things are in the U.S., it's better than almost everywhere else. So I do see that the U.S. dollar will continue to be strong. I do see a situation where the stock market will trade in a range, but I don't see it plummeting at this particular point. And again, a lot of the volatility is going to come close to November when we see what the elections are going to be. But now, again, with the elections, they're trying to throw Donald Trump out. I don't think that that's possible because he was, the Republican nominee type of thing. But this is the most embarrassing and the worst presidential election I've ever seen. And again, it is going to affect the markets in some way, so we just have to see what's going to happen the closer we get to November.
Well, and the truth is, on both sides, Republican and Democrat, they had other choices. And for whatever reason, they went with these candidates. I know John Williams from Shadow Stats, and we have this in our free weekly newsletter. You can get this free weekly newsletter from Harold at rarecoloreddiamonds.com, 1-800-432-1022. It's the companion to the radio show. You'll see all the material that Harold and I are seeing and be on the same page as us as we go through the radio show. But John Williams from Shadow Stats was interviewed by Greg Hunter, and he said the reason that Trump is in the position that he's in is because the U.S. economy is in such poor shape. One of the things that Harold touched on is negative interest rates. And obviously in the environment that we're living in today, even in Canada, our interest rates, if you're in a GIC, are around 1% or less. And when you factor in taxes and inflation, you're in a negative yield position. Even if you're in a retired savings account, whether it be, an RRSP or something along the lines of that, you're in a position where you're getting a negative rate of return. And how do you make money in the environment that we are currently in? And that's where Harold comes in. He has different investment programs that can help you to start making money right now today. All you need to do is give Harold a call. The call is free, and everything discussed is confidential. And Harold will go through the different programs that he has in place. 1-800-432-1022, 1-800-432-1022. Harold's website is rarecoloreddiamonds.com. We talk about negative yields. The U.S. Treasury yields have turned negative for offshore buyers at least. The cost of hedging means that for investors in Japan and Europe, the yield on a 10-year Treasury in the United States has fallen to less than zero. The cost of funding dollars reflected in the 3-month LIBOR rate has disconnected from the Federal Reserve's policy rate in recent weeks, with worries increasing that there's a big crunch brewing in the U.S. money market fund reforms that are due to come into effect in October. Now, we know that in the UK, they lowered rates last week, and they were doing some quantitative easing, printing money, going out and buying bonds, and as a result, their returns on some bonds went into negative yield this week. So here you have the UK now in a negative yield world, along with Switzerland, Japan. And Japan, as we touched on before, they have a run on safes, people going out and buying safes. It was interesting. They actually did a survey in the UK, and we mentioned this on a past show, that a bank actually may charge people to hold their money in the UK. If banks were to charge a small fee for you to hold your savings, where would you keep your money? Well, according to the people in the UK, 29% said in the bank, 48% said at home, 23% said don't know. But that's an amazing statistic. 48% said at home. We'll talk more about that and get into diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 11, 2016. Our time is 9:12 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. Shows archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We also have a podcast through iTunes. Type in the World Financial Report on Radio. We're on YouTube. We have our own page, and we're on TuneIn as well, so you can catch the radio show anytime you want. Connect with Harold at 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. Our featured diamond of the week is a .22 carat, hard-cut, fancy, vivid, purplish pink argyle. See it online at rarecoloreddiamonds.com, featured diamond of the week. We were talking about the UK and that a bank, NatWest, we talked about this last week on the show, was going to start possibly charging people to hold money in the bank. And people obviously weren't too impressed with that. Before the break, we mentioned there was a survey done. 48% of people said they would keep their money at home. And Harold, obviously, we think that there are some alternatives to keeping cash at home, and that is hard assets, diamonds, gold, and silver. And you take a look at our featured diamond of the week. If you're looking to store some wealth and have it as a good long-term investment, this is something people should seriously take a look at in this negative interest rate environment.
Better believe it. In fact, I had a call from one of the banks that I deal with that was talking about charging us for keeping money in the bank. So believe me, these negative interest rates that we've been talking about are happening. They're happening in other parts of the world, and they're definitely 100% about to happen here in North America. So either we're going to go along with it like sheep to slaughter type of thing, or you're going to find alternative ways of making money. And the fact is that the old ways of making money in stock markets, by keeping your money in the bank and CDs and that type of thing, getting interest, those days are long gone. There's no money to be made. Unless you're an expert trader in the stock market and have inside information, you're not going to make money in stock. It's just that simple. The numbers don't lie. 90% of people that trade stocks on their own lose their money. So we obviously do not want to be in that situation. We need to take a much more conservative approach to investing at this point here because, again, as a small fish in a big sea type of thing, with big traders everywhere and hedge funds trading the markets, the small investor really has no chance. And the fact is that if you're sitting in mutual funds or retirement savings plans, the chances are you have not made money in the last 10 years. And as bad as the markets are now in different economies around the world, the fact is that you don't invest in the stock markets when the country that you're trading in is not doing well. So at this particular point, we are very strongly recommending being much more conservative and owning the assets, owning your physical gold, owning your physical silver, owning your diamonds, your art, and those type of things. There are certain investments that are still doing extremely well. Our mining business, where we mine rough, uncut color diamonds, that business is doing tremendously well. We have clients, many of our clients, that are involved in private investments with us that are getting paid in American dollars and making tremendous returns as partners. So again, if that's of interest to you, we would love to help you. Our Canadian clients are our lifeblood. They've been with us since we first made the recommendations in gold back in 1999-2000, when everybody laughed at us when we said gold and silver were going to run, and gold went from $250 to $1,900. Silver went from under $4 all the way up to $50. Those are the type of trends that we've been able to predict and give the information to our clients that did very well in those markets. Now we're in a little bit different time. We've got markets that are trading in ranges, so there's no money to be made there. But there are tremendous opportunities in alternative assets like diamonds. Now, one of the biggest returns that we're looking at, and probably one of the best investments that we feel you could make, is by buying pink diamonds. And the featured diamond this week is a small pink heart, but it's a vivid color. It's one of the most amazing colored diamonds you've ever seen. Now, most Argyle pink diamonds are small diamonds. They're known, actually, as the most concentrated form of wealth on earth. When you purchase an Argyle pink diamond, the diamond gets shipped directly to you. You own it. It's in your hands. You can put it in your safety deposit box, your safe, or whatever you want to do. We could even put it into a beautiful piece of jewelry so you can enjoy it. But the fact is that diamonds are long-term investments. You want to hold on to them for 10, 15, 20 years. They're perfect for retirement because they never go down in value, but they can increase in value tremendously. The reason that we love pink diamonds is because 90 or 95% of them come from one mine. It's in Australia. It's called the Argyle Mine, and it's been in operation since 1986. It was the largest producing diamond mine in the world, producing 30 million carats of diamonds a year. But the majority of those diamonds, those 30 million carats, are industrial white diamonds that are used to cut other diamonds. So they're certainly not investment quality. Out of this amazing mine comes a handful of the most beautiful pink diamonds a year. It's a very tiny and small market, but the fact is these diamonds are worth a fortune. and realizing that 95% of them come from one mine, the Argyle mine. That mine is getting ready to close down. Argyle says that they're going to close the Argyle mine in about 3 to 4 years. It's going to close down before 2020. So we've only got 3.5 years for this market to close down. So if you invest in an Argyle pink diamond and you own this diamond, we'll ship it directly to you. You hold on to that diamond for 5 years, and that diamond should tremendously increase in value. Then on top of that, the longer you hold it, because there won't be any more pink diamonds per se, the diamond will go higher and higher and higher in value. And that is true of most colored diamonds. Now, not all diamonds are investment quality, but Argyle pink diamonds are, and they're spectacular. 95% of them are under a quarter carat, so like I say, they're the most concentrated form of wealth on earth. But again, I doubt that in our lifetime that we will ever have another opportunity to buy a diamond that is in such short supply, and the mine that produces them is going to close down. So this is like any other commodity where the demand is extremely high and the supplies are very low. That's a perfect recipe for higher prices. We think that investing in Argyle pink diamonds is about the best investment you can make. On top of that, green diamonds, we feel, are going to skyrocket in price, and so are orange diamonds. Now, we've seen a huge increase in the price of pinks. We've seen the biggest increase in the price of blues. In fact, blue diamonds over the last 10 years have gone from around $200,000 a carat for a vivid blue diamond to now they're selling at $4 million a carat. There is no other asset or investment in this world today that has done what blue diamonds have done in the past 10 years. We anticipate the same thing to happen with pinks, and now we anticipate the same thing to happen with greens and orange diamonds. They are the rarest of all. There's very, very few of them available. Greens and oranges are the diamonds that we're mining at this particular point, and if you've missed the move in blues, which most people have, do not miss the move in green and orange diamonds. The last vivid green diamond that just sold last month at auction sold for $3 million a carat. $3 million a carat. There are no assets in this world today that will do what rare colored diamonds will do. Now, you don't buy diamonds for the short term. You don't buy them and sell them in 4 or 5 years. It defeats the purpose of them. They're a hedge against anything bad happening. Currency devaluation, everything like that, everything bad that could happen in the investment world today is good for rare colored diamonds. They never, ever decline in value. They only go up because each one is individual. There's no such thing as an exact match in a diamond, in a colored diamond especially. So we're very high on these markets. We are so excited about what's happening in the colored diamond market, and from time to time we bring you auction results. And the auction results for the past several years for colored diamonds have been nothing short of phenomenal. And in actual fact, one of the biggest returns in diamonds have been in yellow diamonds. Yellow flawless diamonds have done tremendously well, and we anticipate that they will. You know, the fact is that they're not the most expensive of all diamonds, but they do go up tremendously in value. And you could buy a $20,000 to $25,000 yellow flawless diamond, and in 10 years from now, you know, that diamond will do better than almost any investment that you could buy. They go up by about 15% a year, and let's face it, by putting your money in the bank, you're getting less than 1% a year. On top of that, diamonds can be sold in other currencies, which is extremely important because right now the U.S. dollar is amongst the strongest currency, and that's where diamonds are being sold in, U.S. dollars. But we can hold auctions in British pounds or in euros or whatever the strongest currencies are. So we not only deal in the rare colored diamond market physically, we also deal in the mining business, which is gigantic, and we feel that our clients will make fortunes in that market, and that's all in U.S. dollars. And then on top of that, we've got our jewelry division. We've got Diamante Atelier that owns over 3,000 pieces of some of the rarest and most beautiful jewels, including the last 8 pieces of Elizabeth Taylor's estate. So again, this is where the big money is. And you don't have to be a multimillionaire to invest in rare colored diamonds. We have diamonds that start in and around $20,000, and we do have diamonds that go to the $40 to $50 million range. Just so you know, the majority of my clients are hardworking, everyday Canadians that just want to do better than what's available in the bank and stock markets. And again, those and many of my clients are not buying multi-million-dollar diamonds, but they do buy diamonds that are $20, $50, $100, $200,000. And again, these assets never ever go down in value. That's the most important thing in an investment today, is capital preservation, not losing your money. Capital appreciation is secondary. You don't lose your money. And when you're putting your money in stocks, there's no doubt that unless you're a super trader, you're going to lose your money. Look at alternative assets. Look at our private investment programs that are paying over 25% a year in U.S. dollars. It is a phenomenal opportunity for our Canadian clients to get ahead of the curve and do much better than the mainstream investors.
Speak with Harold personally, privately, about the different programs he has in place. You don't need to sit in GIC and basically earn nothing, or just have your cash sitting in the bank. If you are in a position where you need to retire, obviously you need to start making money, and you're not going to do it earning 1%. Speak with Harold. There are different programs in place. 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. Our featured diamond of the week from rarecoloreddiamonds.com is a .22 carat hard-cut fancy vivid purplish pink argyle. See it online at rarecoloreddiamonds.com, featured diamond of the week. In our free weekly newsletter, we came across an interview during the week from David Bennett, and he is with Sotheby's. And obviously, during the first 6 months of the year, we kept track of the auctions with Sotheby's and Christie's. It was a big 6 months for both of them and for colored diamonds. If you would like to see auction results, we'll be happy to send them out to you. It was interesting to note in this interview, he was asked about collectors and where the collectors for investment diamonds are coming from. And it was interesting to note that he said more than, in fact, he went on to add, each year we see more countries represented in our auctions, more than 70 countries last year just for our Geneva sales. In 2015, we noted that there was very strong participation from emerging markets. Almost 1/3 of our bidders in Geneva, for example, were from Russia, Asia, and the Middle East. And this has continued into 2016, and that included the spring sale in Geneva. Fully 1/4 of the participants were from Asia. He was asked about colored diamonds and what are the specific stones that are doing very well. And he went on to say, we're seeing a continued strong demand for colored diamonds, in particular pink and blue diamonds, which are the rarest in an already rare category. The unique pink diamond that sold in May and a stunning fancy vivid blue diamond weighing 7.32 carats that sold for more than $17 million each went for more than $2 million per carat. And in the interview, you can read in our free weekly newsletter. We'll be happy to send it out to you. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. He goes on to add that obviously they're seeing more and more participants going online. And they've had a huge increase in online auction sales. And Harold, you really were the pioneer when it came to online auctions for colored diamonds. It was 11 years ago that you wrote your report, Naturally Fancy Colored Diamonds, the Best Kept Secret. There were a lot of people that were skeptical that you could have investment diamonds being offered via a website or even through your auction website, hsfineauctions.com. And we know that there's been tremendous success with both 11 years on. And now some of the bigger companies are starting to copy what you've done a number of years ago. In fact, Sotheby's and Christie's really came around to the way Harold was thinking, and that is diamonds as an investment. And that philosophy now is very, very mainstream and has been proven to be correct over the last 11 years, as diamonds have done exceedingly well at auction as an investment. Harold, I know you have your auction site, hsfineauctions.com, and it has had really some spectacular results. It's been so fun to see the auctions and also be a part of them, and you plan on having more in the future.
Yes. Again, it's a secondary market to resell diamonds, which really never existed before. So very excited about the auction business. It's the business that we intend on putting a lot of money into and doing a lot of auctions over the next few years. So we had to change our technology because technology is always changing, and we found that when we were doing auctions a few years ago that 90% or 80% would attend the auctions via their personal computers. Now we're finding the opposite. 80% would be on their iPhone. So our new technology is done. We will be starting our auctions again in the fall and winter, and they're going to be exciting. We have some tremendous auctions planned. It's really the only auction of its kind. You know, the other companies like Christie's and Sotheby's, as an example, or the car companies and the classic car companies that are holding auctions, they hold a physical auction, and then what they do is they video it, or they allow you to go online and bid, but there's a 2 or 3 second delay, so it's very uncomfortable because, and in order for them to have an auction that way, they must have a physical live auction going on. With my business, we don't have a physical live auction going on. There's no people sitting in a physical audience. This is a live virtual auction that is done from my offices in Florida or anywhere in the world that I am, and anybody in the world can pick up on it. All you have to do is have a computer, an iPad, or an iPhone, and you'll be able to attend our auctions. The fact is that there's less than a half a second delay, not a 2 or 3 second delay. So the fact is that our auctions are very smooth, very comfortable, and I've been actually on Fox News and Bloomberg so many times because of our auction business, and we will be interviewed again this fall and winter. So we have some exciting auctions coming. Some of them will be strictly diamonds. Some of them will be classic car and diamond auctions. We're planning on a husband and wife auction with Ferraris and large diamonds, so that should be a lot of fun. The husband buys a Ferrari, the wife buys a beautiful diamond ring. We're going to have some fun auctions also. Not everything is going to be, expensive auctions. We're going to have some fun with some collectibles that we've collected over the years that a lot of our clients would love. So we're very excited about the auction business. We feel it's the future of our business. And again, we plan on really getting heavily into auctions this fall and winter.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. And ask Harold about our featured diamond of the week. It is an absolute beauty. It's a .22 carat, hard-cut, fancy, vivid, purplish pink argyle. Already very, very rare. You add in the fact that it's heart-shaped and it's a vivid purplish pink, gives it even more oomph. See it online, rarecoloreddiamonds.com, featured diamond of the week. We've talked about hard assets. Obviously, Harold was talking about collectible cars. We've seen recently watches go for record-breaking prices. Even handbags have been selling for record-breaking prices. And just this week, to give you an idea of hard assets in the collectible market, a rare Superman comic book sold for nearly $1 million. It sold, the estimate on it was $750,000. It went for $956,000. It was a 1938 comic book that marked the first appearance of Superman and is considered to be a gem among comic book fans. So there you have it, about 100 copies in the world, and one of them went for close to $1 million. Now, I know that Harold's son, Jonathan, has a Wayne Gretzky rookie card. And I know John's going to be excited about this one, Harold. A Wayne Gretzky rookie card sold for $465,000 at auction. And,
we are very aware of that, yes.
I'm sure Jonathan was very happy.
It was one of a kind. It was in pristine condition. It was absolutely phenomenal. But, wow, beautiful price for a card that originally sold for, well, again, it depends on where you got it, but if you got it through a in the store through gum or something like that, it costs you a nickel or something. But the returns on those type of things, Randy, are just amazing. And we do have some very strong collectible hockey cards.
Oh, definitely. And, the other two stories that I thought were incredibly interesting is Alex Rodriguez retired from the New York Yankees. He made $410 million playing baseball, and he's owed another $27 million. And he, instead of sitting on the bench, he decided to retire. He'll be a special advisor, and he'll also be sort of a tutor to some of the players. But he'll get his $27 million. In total, though, in his career, $410 million. And there was another baseball player, too, who retired. He had 4 years to go on his contract. He retired due to injury, and that's Cecil Fielder. He will be paid out the remaining $100 million on that contract. So if only we all could have a job where we go into retirement and continue to be paid $24 million a year over 4 years, not a bad gig if you can get it. But Harold, for the rest of us, we still believe in investing in hard assets, diamonds, gold, silver. Obviously, collectibles are a fun thing to invest in. We're seeing cars, watches, handbags, people moving into these markets because sitting in cash, getting nothing or negative interest rates is just not the way to go. You're not going to make any money for retirement. And we're seeing people move into alternative investment ideas because they're so afraid of what's happening in the bond market and the stock market. And it's an exciting time for those that are investors of hard assets, in particular, colored diamonds.
You bet, Randy. Again, I'm just very pleased with the recommendation on diamonds. They've done tremendously well and will continue to do so. And again, the supplies of these diamonds are minuscule. You're talking about, we may find one vivid blue diamond every 5 or 10 years type of thing. So again, this is not like trading stocks. It's not like trading commodities. It's owning an asset that over time will do better than almost any investment that you could make. And again, we feel in this day and age with all the risk in the marketplace and the fact that we all work so hard as Canadians and you put money away in a retirement savings plan and it didn't work out. Nobody's made money in retirement savings plans really in the last decade and probably won't do so. So you can't just sit there and continue to do the same thing over and over and over again. You must look at alternatives. Please give us a call. Our clients, our Canadian clients, invest in private programs with me as partners and get paid in American dollars. Our clients are making over 25% a year, in some cases much more than that, and they're getting paid in U.S. dollars and getting out of weaker Canadian dollars. It's imperative that you do that at this particular time. So please give me a call. I'll explain what we're doing here. And if it's comfortable for you, it could literally change your life.
1-800-432-1022. 1-800-432-1022. Harold's website, rarecoloreddiamonds.com. Our featured diamond of the week is a .22 carat hard-cut, fancy, vivid, purplish pink Argyle. And the Argyle mine, as Harold was saying, going to be shutting down in 2020. They may have pink diamonds for a few years after that in their vault. And then at that point, 90 to 95% of the world's pink diamonds will be gone. And the diamond that we're featuring this week, obviously it's the rarest of the rare because it's a heart-shaped diamond. It is absolutely gorgeous. I guess two of the things that I did forget about when it comes to investing in hard assets, art obviously, and wine. The problem with wine, though, Harold, is people always end up drinking the profits. And
True.
The good thing about naturally fancy colored diamonds, rare colored diamonds, you get to wear the profits. And I'd rather wear the profit than drink the profit.
I'm with you on that one.
Thank you very much, Harold Siegel, for an outstanding show and your knowledge for another week.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold. The call is free. Everything discussed is confidential. 1-800-432-1022. Ask him about the different programs he has in place to start helping you make money today immediately instead of sitting in a negative situation in cash or bonds. RareColoredDiamonds.com is the website. Our featured diamond of the week, you can see it. Featured diamond of the week, 0.22 carat hard cut, fancy, vivid, purplish pink argyle. See it online, rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.